Morning, everyone. Welcome back to the stream. Today, we're going to be diving into Fed Chairman Jerome Powell's opening speech at the Jackson Hole Economic Symposium. Jackson Hole. This is a big deal in the world of finance and economics. I'm going to try to keep it straightforward so you can follow along without getting lost in any jargon or any of the data. You can think of this as football season's coming back. Think of this as the Super Bowl for central bankers. It's exciting announcements that could impact your wallet, your job, and the economy. So we're going to break it down step by step. First things first, what is the Jackson Hole? What is the event? It's an annual gathering hosted by the Federal Reserve Bank of Kansas City. It's like a high-level conference where top economists and central bankers from around the world meet with policymakers to discuss big economic issues. This year's theme is labor markets, focusing basically on how jobs are working post-pandemic. This meeting started back, I think, in 1978 something, and is held, I believe it's in Kansas. But why does it matter? Well, it matters to us because Powell's going to be speaking, and typically Powell's tone sets the pace for Fed's future moves. Past speeches have signaled major policy shifts, like how the Fed is going to handle inflation or interest rates. Markets hang on Powell's every word, and it can cause stocks to dump or jump instantly. So be careful trading today. Volatility is likely going to be high. We're going to kick things off at 10 a.m. Powell will be speaking and delivering the keynote / opening remarks / whatever you want to call it, all we care about. I think the conference goes on for a few hours. We're not going to cover the whole thing. We'll cover it until we get bored, basically. What's Powell likely to talk about? He typically keeps this high level. It's very scripted. That's why when you hear him talk, commonly it sounds like he's saying the exact same thing, but what he says will get dissected, basically. He'll likely discuss how the labor market is cooling. It'll tie into the symposium's theme of the labor transitions, maybe some comments on AI impacting unemployment or employment rates, remote work, and maybe employment demographics, something like that. Inflation and prices is another common topic that he's going to touch on likely today. Inflation has been coming down or cooling from its high a couple of years ago, but it's still the hot topic and still remains above the 2% target. Powell might pat the Fed on the back for getting it under control or kind of compliment themselves while warning about risks, future upside risks. That seems to be pretty common with them. Interest rates are the big one, basically, and that's what everyone's betting on or everyone is waiting for, holding their breath for. While we almost certainly will not rate change during this. It's not going to happen. Crazier things have happened, but we can get important context. We can get clues into kind of what they're thinking for this September upcoming meeting, which will actually be the most important, biggest, craziest FOMC of our lifetime, because the odds of an interest rate cut are now up at 90-something%. Up from basically 0% all year to almost 100% in September. This is, to my knowledge, the last time Powell speaks before the FOMC in September. So big stuff. Big stuff potentially coming out. Final topic, overall economy, balancing growth with their dual mandate. Pretty standard stuff. Kind of important context and clues to talk about. We're trying to get through everything before he speaks. Rate cut signals, listens for words like confidence and inflation cooling, or risks to jobs. If he sounds dovish, we have a poll going. You think he's dovish, hawkish, or do you not know what those birds are about? Optimistic about cuts, the stocks might rally. We're going to actually look back at the previous symposiums on the chart after this, and we're going to take a look at what's happened. See, it might surprise you. By the way, guys, while we're going through this, please smash that like button and subscribe. Give the stream a little bit of hype. It's early. I'm on my game. I got some some homework for you. And so keep that hype moving. Keep those thumbs coming through. Tap the screen. You know what the deal is. Traders are pricing in basically a guaranteed cut in September. And any confirmation from Powell today could relate to a big move coming. Policy shifts. He might back away from the old focus on just inflation risks and worry more about unemployment, because we did have unemployment numbers come in and be revised. A lot of drama there with the labor board statistics since the FOMC. We have not heard Powell speak since then. We could definitely hear some kind of remark about labor. That is the theme today. Political vibes. Well, the people are kind of anticipating some kind of political vibe in general. You know, I am not, and I don't believe Powell is being political. You guys are welcome to have your own opinion. He's very much in line, in my opinion, with what he has done since 2018. But with elections looming and pressure from folks like Trump to cut rates faster, Powell may subtly address staying independent. He may opt to avoid any kind of political comment, as he usually does. Almost never touches directly on politics, but of course, context will matter. The Fed doesn't want to even appear like they are influencing their votes or influencing politically, and so you might see some steps away from that. Of course, as always, watch the markets react. We'll have the charts up here. Things can get crazy. Be careful trading again. Don't be messing around with the trades. Okay. Let me see. So I think I'll cut it there. Let's jump back to the technical difficulties. Welcome back. Welcome back, my friends. Headphones will turn on. You would have thought I would have turned these. You'd be wrong. Okay, or they're just not going to turn on. Maybe they're dead. That'd be bad. They might be dead, but we're not. Let me plug these in. I got a whole nother thing coming for it. And they're working. Whatever. Got a whole nother piece of this puzzle for this morning. Coming in. All right. It's early. So here's what I thought we would do. Here's what I was thinking. I'm going to turn this chat box off. Crashes the computer sometimes. Here's what I'm thinking we do. So we have... Basically, this will be for almost... I think it's safe to say that this is likely to be Powell's last symposium. So kind of a fitting time to go back, take a look not just at the previous symposium's timings, but also kind of like an overview of what Powell has done. It's been a long journey. It's been a really, really long journey, and a lot of things have happened. Opinion of him has changed, favorable, negative, from, just completely neutral and unknown to almost a superstar. And it's easy to get lost. It's easy to not really remember what's happened, where we've been, etc. So I think this is a fitting moment to rewind a little bit. Rewind and look at some of the macro drama that's unfolded at each of these symposiums. On the chart, I have the S&P and Bitcoin pulled up. These dotted lines represent the previous symposiums. And let's just take a little bit of a walk. Is everything set up well? Is this good here? See if you can see clearly. The one thing that stinks is Bitcoin has so many more candles that you can no longer, on the day, you can't really have them side by side. So many more candles because we got the weekends. Here we go. We'll do it like that, right? Perfect. Let's get back to 2018. This is basically Powell's debut. Unemployment dipped below 4% and was flirting with economists called full employment. What's up, Gilbert? Be like Gilbert, guys. Smash the like button, subscribe, join our fam. This is going to be some alpha packed. We got about 15 minutes for those of you tuning in before Powell is live speaking. I'm going through Powell's kind of legacy, his drama at these last symposiums, and we can also take a look at the price kind of impacts here. So full employment. After years of dormancy, inflation finally began stirring. Tax cuts, likely from tax cuts in the Jobs Act. This added fuel. CPI peaked around 2.9% year over year in July for the first time at Powell's Jackson Hole meeting. The narrative was the Fed's mission was to land the plane and raise rates just enough to cool the economy without crashing. This was so long ago now. What actually happened, Powell signaled a September hike. Interesting, a September hike, but wrapped it in a dovish language, which calmed the markets, soothed the markets. And basically, as you can see right around here, the market reaction was a bit of a relief, but did inevitably move back down. You can see up there in Bitcoin, this was kind of a rough time as well. Moved sideways and fell down into that Q4. So interesting, in 2018, also looking for interest rate changes in September. He was quoted saying, "We're a long way from neutral," and markets took this as a signal for relentless or for continued hikes, and that cued panic. By 2019, Powell had reversed course a little bit on that. 2019, employment was still strong, somewhere at 3.6 to 3.7%. Maybe we'll just pull up over here. Inflation was stubbornly below target, giving the Fed a little room to cut. The narrative was the yield curve has inverted. Remember that? 2019, a classic recession omen. Global growth was wobbling and policy just felt too tight. Basically, markets were euphoric pre-July FOMC, expecting a dovish pivot. Interesting connotation, kind of like even this year. Markets expecting a dovish pivot. Instead, they got a 1-2 punch. So remember, the Fed has not usually catered to markets' expectations. July 31st, the Fed cut 25 BPS. As expected, but the press conference was a disaster. Powell called the cut a mid-cycle adjustment. A mid-cycle adjustment, and that did not ease the fears that investors wanted. The next day, Trump tweeted about new tariffs. It's almost as if we've never gone anywhere, guys. The next day, Trump tweeted about new tariffs on Chinese goods. A few weeks later, at the Jackson Hole meeting, Powell gave a nod to a September cut and stayed vague. So, interest rate hike in September was alluded to at the Jackson Hole meeting in 2018. In 2019, a September cut was alluded to at the Jackson Hole meeting. Today's going to be spicy, trust me. He gave the nod to the cut, stayed vague in the path forward, and markets responded. Basically, 2020 came into play. Unemployment hit 14.7%. And crazy, we had some crazy outliers there in April. Still painfully high at 8.4% by August by this time. Inflation was virtually non-existent as CPI was at 1% year over year and core PCE at 1.3. The real fear at this point was disinflation. Powell unveiled the Fed's new framework, average inflation targeting. Basically, inflation could run hot for a while. They could allow inflation to run hot for a while. Ooh, we're almost ready. That's the queuing up music. 10 minutes till Powell is live. We only have a few more years to go through. So far, going through the symposiums in the past, we have seen Powell, specifically Powell, allude to cuts and hikes, or mention cuts and hikes for the first time in those years with substantial market outcomes. So this is important. Let me see if I can speed this up. Basically, inflation was not a concern here. Disinflation was, and they were going to allow inflation to run a little bit hot to make up for it for a while. This basically set the stage for the inflation surge of 21-22. Markets initially cheered. Though the sell-off started a few days later, the correction was not triggered by any event. It was just exhaustion. Let's jump to 2021 because we're running low on time. I want to be able to do every year. In 21, this was the transitory year. CPI hit 5.4% in July, core at 3.6, and basically inflation was no longer just a theory. It was absolutely here and on fire. Employment recovered quickly, but was still at 5.2%, and that was above the pre-pandemic levels. The Fed insisted, and this is some of our favorite time in history in 2021, inflation was transitory, driven by pandemic supply chain snarls, and outside the transitory debate, investors were desperate for clarity. Tapering of interest rates. Powell basically signaled that tapering was coming and emphasized that it wasn't tied to rate hikes. His speech leaned heavily on the academic defending transitory thesis. That age, not so great. Market shrugged and then corrected 5% in September. In 22, CPI hit 9.1. So inflation was very, very high in these years. So it has come down a lot since then. And 8.5 in July. Employment was red hot. Unemployment matched a 50-year low here in 2022. Investors hoped for a balanced tone or dovish pivot. Unfortunately, Powell had other plans, as usual. After a year of being wrong on transitory inflation, Powell channeled Paul Volcker. His speech was short, sharp, and brutal, designed to crush any hope of easing. Powell ambushed the market by rewriting the speech last minute, and the markets puked. The markets were not happy. Into 2023, CPI and core were back down to pretty reasonable levels at 3.2 and 4.7%. Employment was still inexplicably strong, and the narrative was immaculate disinflation. The dream was alive. Inflation was falling without pain through 2023, without the pain that Powell had specifically warned about. Investors hunted for a sign of pivot, and after the 2022 drama, this Jackson Hole was basically a snooze. It was a nothing burger. The S&P dipped and stabilized, and Powell stayed the course. This brings us to the most recent Jackson Hole meeting. Ours is about to begin in 8 minutes. This timing's perfect. 2024. Inflation was stuck in the 2.9 to 5.3% range, and this was considered the last mile of our stubborn inflation, though it proved very stubborn. The inflation proved stubborn. I got those words wrong. Unemployment holding firm at about 4%, despite 2-decade high rates. Spicy. Rate cut hopes basically died a slow death. Investors entered the year expecting 6 cuts. Resilient data kept pushing those hopes back. In 2024, the Fed was boxed in. Inflation was too low to hike, and growth was too strong to cut. And it was an election year. So what happened? Powell gave the green light for a September cut. This is another symposium historically where we got a green light for a cut or hike, for a change in the interest rate in September. Markets barely flinched and corrected 4% anyway. Why? Markets were at all-time highs. They were overbought and basically corrected, which is pretty similar to what we see here today. Markets at all-time high. They're a little overbought. You read in between the lines. Basically, we have gone through the last, 7 years of symposiums, and they have been wild. They have been spicy. Really, just 2023 was a little slow. The rest of them, we saw significant market signals, and in fact, we actually have seen Powell himself signal a cut or hike for September at many of these meetings. So will that happen again today, ladies and gentlemen? Probably. I think that's reasonable. I think that's very reasonable. Did I close the stream? I didn't close the stream. We're good. Hopefully we're good. We got 1,700 viewers early in the morning. Oh yeah. Let me pull up the chat. Did you like that? Did you like it, son? I messed it up a bunch. I messed it up a lot. It's early, but I'm impressed with myself. You gotta give yourself credit. It's early. We here. I'm out here. We out here. It's 9:55. Trump will have an announcement today. Of course he will. Trump can never allow Powell to have the spotlight. So Trump is going to be speaking, I think it's at noon. It's another one of the big announcements of an announcement thing. I don't think it has to do with the Jackson Hole. Unless more information comes out, we're probably not going to cover it. Unless it's more info specific to our topics, we're not going to cover it. But yeah, don't get too excited about it being, like a crypto thing or being really anything. If you've noticed the pattern, he always speaks when Powell speaks. Every FOMC, he schedules something. Though I will say, to be fair and balanced, Trump does a speech a lot. So it's not as if he only speaks when Powell's speaking. So that's fair. Fair and balanced reporting. Fair and balanced. Brought to you by... Let me see, boys. Let me see. Who's here? We have 4 minutes. Let me update. Let me see if my feed's going. I'm gonna refresh this. We might have had some boots on the ground at this meeting, but it didn't work out. It would have been harder also than we would have imagined. It would have been more difficult. Here we go. Nice. We can get the feed right from the Kansas City Fed. Kansas City Fed, we're gonna watch their live stream. Kansas City Fed has 2,000 followers on YouTube. You can't really see that. They have 7,000 people queued up to watch, but the live stream chat is disabled. What a missed opportunity. Womp womp. Okay. Their stream actually hasn't even started yet. Okay. Cool. So I can't even like full screen it. That's fine. You know what I'm gonna do? I was like so kind of rushed jumping into this that I gotta make sure all my tabs and stuff are good. Did I close anything I needed? Tom's a new man. That's right, baby. Oh yeah, that's right, baby. You know, sometimes, just sometimes, you just want to wear a different pair of shades. You know, you just want to have a different pair of shades on, and that's okay. You're allowed to. Okay. Let's get one round. Our boy at his final symposium. It's been an era. Yeah, chairman, he's the captain of the crew. Navigating through the markets, knowing what to do. Federal reserves in control, making moves. Keeping that money flowing so the economy can groove. Share Powell, making paper every hour. I'm gonna miss him. Share Powell, he got that money power. Hater on his side, watch him rise and devour. Yeah, he's the chairman of the board, making moves that empower. Go time, go time. It's the best part of a Powell. We're gonna miss him. Love him or hate him, guys. Like you don't have to like him. You can think whatever you like about him. But man, when he's gone, who's gonna replace him? Whoever replaces him is not gonna be nearly the same legend. I actually like doing that little walkthrough history. Data on his side. That's right. Rise and devour. Let's go. Shout out to Massachusetts. You can hear the AI quality millions of miles away. Yeah, you can. What, you think I rapped that, son? You think I did it? I sung it. I'm the rapper. Yeah, you're right. You're actually right. I have many talents. We have just 60 seconds until Powell is set to speak. He's always a minute late, so you got 2 minutes. Grab your brews, roll up, get your coffees, like the stream, hype it up, share it out. Hype it up, share it out. Powell's coming on live. These symposiums we just walked through have historically had lots of impact on markets. They have commonly had statements alluding to or even pretty much guaranteeing interest rate cuts or hikes in the past. We've seen that in multiple symposiums. For September, there's a lot of confluence from these last meetings to this one. It could be very, very spicy. If you haven't subscribed, subscribe. Hey, I don't know if this is broken. All I've seen is Gilbert James. Be like Gilbert James. Subscribe. Join our fam. Let's hope the sound isn't terrible again. Fat chance, bro. Fat chance. The next chair will be Kevin. Just Kevin. Just a guy named Kevin. Just Kevin. That's fair. I think it should be me. I think they should elect me to be the Fed chair. Yeah. You sold a big chunk of your alts last night. I'm not going to lie. Probably not a bad idea. These symposiums have not been super bullish historically, especially not with markets at all-time high. If you have subscribed, like, that's right. Wake and bake to the Powell. What's up, Kevin Stone? There he is, the next Fed chair. The next Fed chair, Tom Chair. Tom Powell. I'm going to miss him. I'm going to miss him. This is our last symposium with Chair Powell. We'll never, probably never. I'd say probably because I guess there's always a chance that he'll remain the Fed chair. A fat chance. Pigs will fly. Pigs will fly, baby, but there's a chance. Never say never. There we go. These blue lights. You know, I did the stream without any glasses on. But my eyes were just so pissed after, so I got to try the blue lighter, see if this helps. I think all my stuff back here is ready. Bitcoin, bump it. That's right. Bitcoin is bumping it right now, it seems. Wow. Nice. In this minute, since Chirpow, maybe Chirpow, just don't go on. Just be late, bro. Because Bitcoin pumping right now. On no statement, stocks also pumping right now, heading for all-time highs. I told you. It was going to get spicy, and it's already spicy. Powell hasn't even spoke yet. And markets are sending. Bitcoin is up 1.1% in 60 seconds. SPX up about the same 1% over the course of the last 60 seconds. Powell, just let markets pump. Or maybe Powell's filling his bags first. What do you think? We got a lot of the fam here. We should be hearing from Powell in just a few seconds, but I'm seeing some of the OGs of this channel. What's up, 420 Bud Monster, Ace of Hearts 420. Speaking of 420, let's get 420 likes on the stream, guys. Don't be a deadbeat. Hit the like button. Alexander G, All is the End, American Crypto Monster, Andro Sida. I see a lot of new names. Ask Fasal, Based Bailey, Bajorn, Sika Sloba, CM, Darius. Here we go.
Inflation, though still somewhat elevated, has come down a great deal from its post-pandemic highs. At the same time, the balance of risks appears to be shifting. In my remarks today, I will first address the current economic situation and the near-term outlook for monetary policy. I will then turn to the results of our second public review of our monetary policy framework, as captured in the revised Statement on Longer-Run Goals and Monetary Policy Strategy that we released today. When I appeared at this podium 1 year ago, the economy was at an inflection point. Our policy rate had stood at 5.25% to 5.5% for more than a year. That restrictive policy stance was appropriate to help bring down inflation and to foster a sustainable balance between aggregate demand and supply. Inflation had moved much closer to our objective, and the labor market had cooled from its formerly overheated state. Upside risks to inflation had diminished, but the unemployment rate had increased by almost a full percentage point, a development that historically has not occurred outside of recessions. Over the subsequent 3 Federal Open Market Committee meetings, we recalibrated our policy stance, setting the stage for the labor market to remain in balance near maximum employment over the past year. This year, the economy has faced new challenges. Significantly higher tariffs across our trading partners are remaking the global trading system. Tighter immigration policy has led to an abrupt slowdown in labor force growth. Over the longer run, changes in tax, spending, and regulatory policies may also have important implications for economic growth and productivity. There is significant uncertainty about where all of these policies will eventually settle and what their lasting effects on the economy will be. Changes in trade and immigration policies are affecting both demand and supply. In this environment, distinguishing cyclical developments from trend or structural developments is difficult. This distinction is critical because monetary policy can work to stabilize cyclical fluctuations, but can do little to alter structural changes. The labor market is a case in point. The July employment report, released earlier this month, showed that payroll job growth slowed to an average pace of only 35,000 per month over the past 3 months, down from 168,000 per month during 2024. This slowdown is much larger than assessed just a month ago, as the earlier figures for May and June were revised down substantially. But it does not appear that the slowdown in job growth has opened up a large margin of slack in the labor market, an outcome we want to avoid. The unemployment rate, while edging up in July, stands at a historically low level of 4.2% and has been broadly stable over the past year. Other indicators of labor market conditions are also little changed or have softened only modestly, including quits, layoffs, the ratio of vacancies to unemployment, and nominal wage growth. Labor supply has softened in line with demand, sharply lowering the break-even rate of job creation needed to hold the unemployment rate constant. Indeed, labor force growth has slowed considerably this year with the sharp fall-off in immigration, and the labor force participation rate has edged down in recent months. Overall, while the labor market appears to be in balance, it is a curious kind of balance that results from a marked slowing in both the supply of and demand for workers. This unusual situation suggests that downside risks to employment are rising. And if those risks materialize, they can do so quickly in the form of sharply higher layoffs and rising unemployment. At the same time, GDP growth has slowed notably in the first half of this year to a pace of 1.2%, roughly half the 2.5% pace in 2024. The decline in growth has largely reflected a slowdown in consumer spending. As with the labor market, some of the slowing in GDP likely reflects slower growth of supply or potential output. Turning to inflation, higher tariffs have begun to push up prices in some categories of goods. Estimates based on the latest available data indicate that total PCE prices rose 2.6% over the 12 months ending in July. Excluding the volatile food and energy categories, core PCE prices rose 2.9%, above their level of a year ago. Within core, prices of goods increased 1.1% over the past 12 months, a notable shift from the modest decline seen over the course of 2024. In contrast, housing services inflation remains on a downward trend, and non-housing services inflation is still running at a level a bit above what has been historically consistent with a 2% inflation. The effects of tariffs on consumer prices are now clearly visible. We expect those effects to accumulate over coming months with high uncertainty about both timing and amounts. The question that matters for monetary policy is whether these price increases are likely to materially raise the risk of an ongoing inflation problem. A reasonable base case is that the effects will be relatively short-lived, a one-time shift in the price level.
Transitory?
Of course, one time does not mean all at once. It will continue to take time for tariff increases to work their way through supply chains and distribution networks. Moreover, tariff rates continue to evolve, potentially prolonging the adjustment process. It's also possible, however, that the upward pressure on prices from tariffs could spur a more lasting inflation dynamic, and that is a risk to be assessed and managed. One possibility is that workers who see their real incomes decline because of higher prices demand and get higher wages from employers, setting off adverse wage price dynamics. Given that the labor market is not particularly tight and faces increasing downside risks, that outcome does not seem likely. Another possibility is that inflation expectations could move up, dragging actual inflation with them. Inflation has been above our target for more than 4 years and remains a prominent concern for households and businesses. Measures of longer-term inflation expectations, however, as reflected in market and survey-based measures, appear to remain well anchored and consistent with our longer-run inflation objective of 2%. Of course, we cannot take the stability of inflation expectations for granted. Come what may, we will not allow a one-time increase in the price level to become an ongoing inflation problem.
Come what may.
So,
come what may.
Putting the pieces together, what are the implications for monetary policy? In the near term, risks to inflation are tilted to the upside and risks to employment to the downside, a challenging situation. When our goals are in tension like this, our framework calls for us to balance both sides of our dual mandate. Our policy rate is now 100 basis points closer to neutral than it was a year ago, and the stability of the unemployment rate and other labor market measures allows us to proceed carefully as we consider changes to our policy stance. Nonetheless, with policy in restrictive territory, the baseline outlook and the shifting balance of risks may warrant adjusting our policy stance. Monetary policy is not on a preset course. FOMC members will make these decisions based solely on their assessment of the data and its implications for the economic outlook and the balance of risks. We will never deviate from that approach. So, turning then to my second topic. Our monetary policy framework is built on the unchanging foundation of our mandate from Congress to foster maximum employment and stable prices for the American people. We remain fully committed to fulfilling our statutory mandate, and the revisions to our framework will support that mission across a broad range of economic conditions. Our revised statement on longer-run goals and monetary policy strategy, which we refer to as our consensus statement to save time, describes how we pursue our dual mandate goals. It is designed to give the public a clear sense of how we think about monetary policy, and that understanding is important both for transparency and accountability, and for making monetary policy more effective. The changes we made in this review are a natural progression grounded in our ever-evolving understanding of our economy. We continue to build upon the initial consensus statement adopted in 2012 under Chairman Ben Bernanke's leadership. Today's revised statement is the outcome of the second public review of our framework, which we conduct at 5-year intervals. This year's review included 3 elements: Fed Listens events at reserve banks around the country, a flagship research conference, and policymaker discussions and deliberations supported by staff analysis at a series of FOMC meetings. In approaching this year's review, a key objective has been to make sure that our framework is suitable across a broad range of economic conditions. At the same time, the framework needs to evolve with changes in the structure of the economy and our understanding of those changes. The Great Depression presented different challenges from those of the Great Inflation and the Great Moderation, which in turn are different from the ones we face today.
The Great Pump.
At the time of the last review, we were living in a new normal, characterized by the proximity of interest rates to the effective lower bound, or ELB, along with low growth, low inflation, and a very flat Phillips curve, meaning that inflation was not very responsive to slack in the economy. To me, a statistic that captures that era is that our policy rate was stuck at the ELB for 7 long years following the onset of the global financial crisis in late 2008. Many here will recall the sluggish growth and painfully slow recovery of that era. It appeared highly likely that if the economy experienced even a mild downturn, our policy rate would be back at the ELB very quickly, probably for another extended period. Inflation and inflation expectations could then decline in a weak economy, raising real interest rates as nominal rates were pinned near zero. Higher real rates would further weigh on job growth and reinforce the downward pressure on inflation and inflation expectations, triggering an adverse dynamic. The economic conditions that brought the policy rate to the ELB and drove the 2020 framework changes were thought to be rooted in slow-moving global factors that would persist for an extended period. And they might well have done so, if not for the pandemic. The 2020 consensus statement included several features that addressed the ELB-related risks that had become increasingly prominent over the preceding 2 decades. We emphasized the importance of anchored inflation, longer-term inflation expectations to support both our price stability and maximum employment goals. Drawing on an extensive literature on strategies to mitigate risks associated with the ELB, we adopted flexible average inflation targeting, a make-up strategy to ensure that inflation expectations would remain well anchored, even with the ELB constraint. In particular, we said that following periods when inflation had been running persistently above 2%, appropriate monetary policy would likely aim to achieve inflation moderately above 2% for some time. In the event, rather than low inflation in the ELB, the post-pandemic reopening brought the highest inflation in 40 years to economies around the world. Like most other central banks and private sector analysts, through year-end 2021, we thought that inflation would subside fairly quickly without a sharp tightening in our policy stance, as this slide will show. When it became clear this was not the case, we responded forcefully, raising our policy rate by 5.25 percentage points over 16 months. That action, combined with the unwinding of pandemic supply disruptions, contributed to inflation moving much closer to our target without the painful rise in unemployment that has accompanied previous efforts to counter high inflation. This year's review considered how economic conditions have evolved over the past 5 years. During this period, we saw that the inflation situation can change rapidly in the face of large shocks. In addition, interest rates are now substantially higher than was the case during the era between the global financial crisis and the pandemic. With inflation above target, our policy rate is restrictive, modestly so in my view. We cannot say for certain where rates will settle out over the longer run, but their neutral rate may now be higher than during the 2010s, reflecting changes in productivity, demographics, fiscal policy, and other factors that affect the balance between saving and investment. During the review, we discussed how the 2020 statement's focus on the ELB may have complicated communications about our response to high inflation. We concluded that the emphasis on an overly specific set of economic conditions may have led to some confusion, and as a result, we made several important changes to the consensus statement to reflect that insight. First, we removed language indicating that the ELB was a defining feature of the economic landscape. Instead, we noted that our monetary policy strategy is designed to promote maximum employment and stable prices across a broad range of economic conditions. The difficulty of operating near the ELB remains a potential concern, but it is not our primary focus. The revised statement reiterates that the committee is prepared to use its full range of tools to achieve its maximum employment and price stability goals, particularly if the federal funds rate is constrained by the ELB. Second, we returned to a framework of flexible inflation targeting and eliminated the make-up strategy. As it turned out, the idea of an intentional moderate inflation overshoot had proved irrelevant. There was nothing intentional or moderate about the inflation that arrived a few months after we announced our 2020 changes to the consensus statement, as I acknowledged publicly in 2021. Well-anchored inflation expectations were critical to our success in bringing down inflation without a sharp increase in unemployment. Anchored expectations promote the return of inflation to target when adverse shocks drive inflation higher and limit the risk of deflation when the economy weakens. Further, they allow monetary policy to support maximum employment in economic downturns without compromising price stability. Our revised statement emphasizes our commitment to act forcefully to ensure that longer-term inflation expectations remain well anchored to the benefit of both sides of our dual mandate. It also notes that price stability is essential for a sound and stable economy and supports the well-being of all Americans. This theme came through loud and clear at our Fed Listens events. The past 5 years have been a painful reminder of the hardship that high inflation imposes, especially on those least able to meet the higher costs of necessities. Third, our 2020 statement said that we would mitigate shortfalls rather than deviations from maximum employment. The use of shortfalls reflected the insight that our real-time assessments of the natural rate of unemployment, and hence of maximum employment, are highly uncertain. The later years of the post-global financial crisis recovery featured employment running for an extended period above mainstream estimates of its sustainable level, along with inflation running persistently below our 2% target. In the absence of inflationary pressures, it might not be necessary to tighten policy based solely on uncertain real-time estimates of the natural rate of unemployment. We still have that view, but our use of the term shortfalls was not always interpreted as intended, raising communications challenges. In particular, the use of shortfalls was not intended as a commitment to permanently forswear preemption or to ignore labor market tightness. Accordingly, we removed shortfalls from our statement. Instead, the revised document now states more precisely that the committee recognizes that employment may run at times above real-time assessments of maximum employment without necessarily creating risks to price stability. Of course, preemptive action would likely be warranted if tightness in the labor market or other factors pose risks to price stability. The revised statement also notes that maximum employment is the highest level of employment that can be achieved on a sustained basis in a context of price stability. This focus on promoting a strong labor market underscores the principle that durably achieving maximum employment fosters broad-based economic opportunities and benefits for all Americans.
All-time highs today?
The feedback we received at Fed Listens events reinforced the value of a strong labor market for American households, employers, and communities. Fourth, consistent with the removal of shortfalls, we made changes to clarify our approach in periods where our employment and inflation objectives are not complementary. In those circumstances, we will follow a balanced approach in promoting them. The revised statement now more closely aligns with the original 2012 language. We take into account the extent of departures from our goals and the potentially different time horizons over which each is projected to return to a level consistent with our dual mandate. These principles guide our policy decisions today, as they did in the 2022 to 24 period, when the departure from our 2% inflation target was the overriding concern. In addition to these changes, there is a great deal of continuity with past statements. The document continues to explain how we interpret the mandate Congress has given us and describes the policy framework that we believe will best promote maximum employment and price stability. We continue to believe that monetary policy must be forward-looking and consider the lags in its effects on the economy. For this reason, our policy actions depend on the economic outlook and the balance of risks to that outlook. We continue to believe that setting a numerical goal for employment is unwise because the maximum level of employment is not directly measurable and changes over time for reasons unrelated to monetary policy. We also continue to view a longer-run inflation rate of 2% as most consistent with our dual mandate goals. We believe that our commitment to this target is a key factor helping keep longer-term inflation expectations well anchored. Experience has shown that 2% inflation is low enough to ensure that inflation is not a concern in household and business decision-making, while also providing a central bank with some policy flexibility to provide accommodation during economic downturns. Finally, the revised consensus statement retained our commitment to conduct a public review roughly every 5 years. There's nothing magic about the 5-year pace. That frequency allows policymakers to reassess structural features of the economy and to engage with the public, practitioners, and academics on the performance of our framework. It is also consistent with several global peers. To wrap up, I want to thank President Schmid and all of his great Kansas City staff who work so diligently to host this outstanding event annually, counting a couple of virtual appearances during the pandemic. This is the 8th time I've had the honor to speak from this podium. Each year, this symposium offers the opportunity for Fed leaders to hear ideas from leading economic thinkers and focus on the challenges we face. The Kansas City Fed was very wise to lure Chair Volcker here to this national park more than 40 years ago, and I am so proud to be part of that tradition. Thank you very much.
Pump our bags, baby. Pump them. Pump it. Pump the bags. Pump the bags. Pump our bags. Oh my. I told you it'd be exciting. If you missed the intro, you got to go back and watch it.
Thank you very much.
You're welcome very much. Hold up here. So Powell's done speaking. The symposium, the Jackson Hole, will continue. Here's what's going down. Bitcoin, stocks, Ethereum, everything rallying off of what I guess is perceived as a dovish tone of Powell here. Powell's dovish tone. Bitcoin rocketing, Ethereum rocketing. 2 levels not seen from days ago. Look at Ethereum here on the daily candle, up 7.6% right now. Was up almost 10% after hitting resistance at 4,600. Retracing a little bit here. I do expect to see some more weakness in the dollar. Here is where I'm at. This is, I don't actually love this, even though I want it to keep pumping. I love it. You know, keep the pump going. Keep the hype alive. Bitcoin rallied exactly to the monthly pivot that we were so optimistic about last week after being tested as support and holding 15.7-ish. We lost it a few days ago. Things became very bearish again. Sentiment. Bitcoin pumping exactly to that level and potentially reversing here with the first green candle. It's definitely too early to call. We could see this continue through the day if we do. Things get very exciting. Very, very exciting into the end of August. That seems to be the logical move, but markets are rarely logical. I am nervous here. I love the pump. It's so nice to finally see something happen and we get green candles. I feel like that hasn't happened in years. Where this is reversed is making me nervous, and maybe that's the way it's supposed to be. Reversing here would be really ugly. Breaking through here might lead us to some very exciting times over even the next few days, even the next few hours. Bitcoin dominance is tanking, and yes, that means USDT dominance is rising. But Bitcoin dominance continuing to tank here on the week after falling out of its ascending channel, breaking 60% support. We are driving lower into that alt season. Remember all those influencers who told you it was alt season for years and years and years every day and got you to buy their bags and probably dumped on you or probably didn't? Remember when we weren't saying that? Remember the first time we said it's probably alt season, or alt season is likely here, right here, back here, end of July, beginning of August. We said it one time. Still could be wrong, but hey, chart's looking good. Alt season is coming as dominance is dropping. Bitcoin releasing its iron grasp on the market. God, I don't like this. We need to push through here. We need to get through this level. We can't just reverse here at August's open. I have monthly pivot marked out on this chart. Some of you may be wondering why. It's very easy to see. August has traded to a new all-time high. Since then, it has fallen below its open at 15.7. We've spent a bunch of days there, and now in this moment, we have retested the monthly open at 15.7. Retaking that level is the first step to new all-time highs, to retesting those highs, to closing August a beautiful green candle, a big, beautiful green candle. This is it. This is it. if you're looking for shorts, if you're bearish into the end of this year, I think the places that I would look for shorts or hedges is 15.7 right here at the August Open. I probably wouldn't go hard there. But then again at 19.5, if you see that trade, I think those are the two positions or the two places to potentially look to take some kind of profits or hedge short for if you're bearish. I'm not bearish yet. I think we have more all-time highs this year. But dang it, I need to see this break. This is a rough place to see price reverse, especially after that excitement. Ethereum. Keep going, Ethereum. People in chat were like, all-time high today? It's possible. That's the thing about these all-time highs is when they come, they're going to come so quick. Just like you last night did getting with your girlfriend. They're going to come so fast. It's not going to, be a steady trajectory into them typically. It's things look bad, it reverses in one day, and it blasts, right? We get new all-time highs. So it could happen right now, could happen in this hour, could happen today, could happen this weekend, could happen in Q4, right? Usually the price action that we're seeing right in front of us isn't a great indicator of what is really going to continue, zoomed into low time frames. But man, Ethereum making some serious ground here. Damn. Funny story, I actually, on Wednesday night at the close of the day, Ethereum traded down to 4,000, just under 4,100. I had the thought of, man, I should close my Ethereum long. This looks like it's going to go down more. And I was like sitting there looking at it, and I said to myself, dude, if you close this right now, you're going to close it at the exact bottom. And it was the exact bottom. I did not close it. Even earlier this morning with our wick, Bitcoin broke structure here. Bitcoin traded below 12K. I did not expect to see this. Broke down and basically ran stops, faked everyone out into this symposium, into the Jackson Hole meeting with a nice rally here. I just do not like that it stopped right at the monthly open. This is the most nerve-wracking price that we could see this reverse at right now. I really hope that we see intraday. I mean, it's still very early. I hope we see a break of 15.7. A lot of other alts moving as well. Our position from 50 cents looking okay. Not my favorite, but still that trade's looking pretty solid. XRP regaining ground. We're seeing a lot of this pattern kind of across the majors here. Nice moves, but the moves haven't gotten us out of the muck yet. They haven't gotten us out of trouble. Solana faring rather well, battling with that 190 resistance again. Bullish engulfing the previous day's losses. That's one thing I do like about all these charts, is we can see the sell-off from yesterday largely being absorbed. I mean, you can really see it on Ethereum, largely being absorbed, and prices trading higher, potentially beginning an uptrend from a local low from Tuesday and Wednesday of this week. When Subaru right now. Can we look at Solana? I did just pull up Solana. I did pull it up. It's right here. Solana looks good. It's not moving maybe as fast as some people would like, but these higher highs, man, the lows are coming up. I view this as a resistance being eaten away. Basically, got good risk to rewards. There's good risk to reward trades here, looking at these lows and saying, I believe that this uptrend will continue, or that you don't believe this uptrend will continue. You think this is like a rising wedge and looking for a short opportunity, maybe 210 to stop. Well, that would be up to you. But targeting these lower lows, I think Solana is going to look to retest these highs by the end of the year. I wouldn't count it out quite yet. Wouldn't count it out. No, it's looking good. What else do we got? What else do we got here? What alerts went off? Link looking good. I was maybe too bearish on Link, too pessimistic about its rally. Looking for a potential short to hedge down to $19. Link has other plans. Link is just climbing higher, kind of doing its own thing here, to its own tune. Link is marching upwards to that $30 target, ignoring my calls for a back test, as we do see happen more and more while this market heats up. But $30 looking like a solid place for Link to head to. What else do we have? Tron, of course, Troning, doing the same thing it's been doing. Looking for higher highs there. Looks like support has been found. Probably going to go test above 37 cents. What do we got? Okay, good. Okay, I had to move away from Bitcoin because it was making me nervous. Here we go. This is serious stuff. This is very serious. Please break 115.7. If you reject from 115.7, things look so shitty. Please don't do that right now, Bitcoin. I'm liking this move. You're coming back up. You're floating back up. I'm not seeing a harsh rejection here. maybe total crypto market cap will have some secrets for us. All right, I see some secrets. Total back tested 3.7 on Wednesday. That got really sketchy today again, and now really kind of just following the rest of crypto in this sense, setting that higher high, breaking past yesterday's sell-off. Still not out of trouble though. Let's see, how's the week on this? Damn, look at that weekly candle. If we close this week up, if we close this week up, that chart looks insane. That bottom wick absorbed all the sellers. Boom. I like that. Where's it on the month? Green month still. Okay, interesting. That could be a sign for Bitcoin. Crypto for August is green. Bitcoin now battling to flip back green. I think that's a nice little indicator. What about our other pairs here? By the way, guys, happy Friday. Happy Friday. Happy final 𝐒𝐴 symposium. What an era. What an era. If you missed the walk through these symposiums before 𝐒𝐴 spoke today on this live, check it out. I think it's worth watching. So much has happened over these years. A lot of opinions on 𝐒𝐴, and no matter what your opinion is, I think it is helpful to go back and kind of have that rundown of what's happened over the years, because a lot's happened. Inflation has been hot. It's been cold. We've seen all kinds of things happen over the last, since 2018? 7 years. We've seen everything when it comes to Fed rates, inflation, etc. I think it's worth watching. These pairs not giving us much either. Really, the alpha here, I think, is total crypto market cap, kind of front-running, foreshadowing, and then Bitcoin right here, right now, looking at this monthly pivot. Just do it, bro. Just push through. Push through. Push it to the limit. Ooh, Ethereum. Ethereum giving up no ground here. Ooh, boys, boys, boys. The dreams are coming true. Dreams are coming true. Are your dreams? Don't let them be memes. Oh, man. Oh, man. What about stocks? Is stocks retraced too? Same thing. Stocks sitting just underneath all-time high. Looking at SPX, we're at 6,463. The all-time high, 6,481. That's a $20 difference, or a quarter of a point. Stocks are absolutely in territory to break all-time highs today, right now, off the symposium. You look at the symposium's timing, and this is one of the few kind of binary, directional, monodirectional moves we've seen with a news event or a press conference in, I don't know, since April. The conference started exactly 10 a.m. Boom, green candles. There's been a little bit of a pullback, but really little to no shake up here in the bigger picture. Just boom up. Okay, we closed that 15-minute a little doji. Hopefully looking to break again, man. If stocks moved all-time high, I think Bitcoin's going to look to retest this monthly pivot, and I think this is like all that matters right now. This is all that matters today to me in this moment. Oh, Ethereum, go, buddy. Ethereum also in range or in proximity to all-time high. Whew, close enough. It's in firing range. 4,631. The all-time high, 4,867. A little bit farther than stocks, but of course Ethereum more volatile than stocks. What a move, bros. If you're in the Crown Crypto group, by the way, if you're looking for one-on-one mentoring with myself, that is available at joincrowncrypto.com. Posted last night. This trade got stopped out, but it was a good trade when I posted it, and I still think it's a good trade right now to take. That aged well. 10% take since last night. Joincrowncrypto.com. Yeah. Fire. That's so crazy. Yep. like last night. Wait, can I not open this? There we go. Last night in the group, I said this was a good trade when I posted it. It got stopped out, and I think it's a good trade again right now. Look at what happened. Look at what happened there. Boom. Boom, baby. Let's go. Let's do it. Oh, my longs are long again. We're rich again, boys. Enjoy it for the 5 seconds that it will last. My Ethereum trade up now 531%. Still down from where it was just a few days ago. A little bit. Ooh, 11,111 and 11 cents. Yo, screenshot that. I gotta screenshot that. That's crazy. Look at those ones. It's a sign. Anybody into numerology, it's a sign, bro. 11111.11. What? What? Screenshot it, it's over. I didn't even know that. Oh, here we go. I was going to end the stream after the symposium, but I cannot look away right now, guys. Bitcoin is absolutely edging us one more time, edging us a final time. Turning us into gooners. Here we go. 115,740 and counting, retesting this level. Oh my God, breakthrough. Yes. Breakthrough, go. Breakthrough, go. Go, 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 go. Do it. Do it. Don't reject. Just do it. Bitcoin flipping August green temporarily while stocks edge towards all-time high. Ethereum rocketed. Come on, guys. Come on. Get it together. Get it together. Stocks, I don't even need you. You'll give me an alert if you hit all-time high. There we go. Here we are. This is it. Let's get some tunes on. Let's get some tunes, because at this point, I guess we're sitting here. Guess we're chilling. So weird. What? CNBC TV 18. Why do some of these live streams show Powell still live? He's not live still. I should double check that. Now let's just try this mix. All right. I don't know what this is. Okay, we'll try a different one. Just put on the playlist that is classic to the stream. Let me throw it on. Alright, yeah, it's over. It's been over for 15 minutes. Why are some of these channels showing it live still? Let's go. Loving the action. What's up, Tim Apple? What mix was that, Fire? It was by DJ 𝐒𝐴𝐳. We put him on many times in the past. I'll show you. You liked it? I don't know. This one is a little chillin'. Party Summer, DJ 𝐒𝐴𝐳, M official. I mean, I want to go over here. What's going on over here? Alright. Mix it up today. Bitcoin pushing through. Let's go. Let's go. Focus. I know. Oh, it's so exciting. Stocks approaching all-time high. Bitcoin breaking August. Pivot. Send it. Will stocks hit all-time high and Ethereum at the same time? Possible. Gold? Gold's in the same range. Green monthly, baby. Let's go. Let's go. $616K. Let's go. You've got to pump it up. Oh, come on. Come on. Go. That's just like ready to blast. Do it. Ethereum flirting with the breakout. Huge gains since the symposium. Let's go. Momentum catching VWAP, rolling over, money flow leading the way as it has been. Ethereum looks primed to retest all-time highs. Primed. Bitcoin, get over it. Bitcoin breaking through its monthly pivot. August now officially green. Backtesting it because why not? Because why not just keep us edging forever, right, Bitcoin? Send it, bro. Just send it. What a candle. It's only 3%, but what a candle. $3,300 in 1 hour. 42 minutes. Back below. God damn. God damn. Boop. Get up. We earned this. We earned it. Need 1,000 likes for all-time high. Do it. Yeah. All right. I like this mix. There we go. Let's go. Little sandstorm for the pump. Let's go. Little sandstorm pump. Whoa. Gold pumping. Dollar should be dumping. Dollar is dumping. Wow, look at that. Look at that. You gotta wait till Trump's speech, maybe. Look at the dollar. We're zoomed in. Yeah, this is not quite as big as it looks, but it is pretty big. Again, that's what you told your girlfriend. Dollar dumping. Dollar not liking the symposium. Let's leave this up. No, this is not Kanye West's coin. Though Kanye West's coin did come and go. That's wild. Trump is gonna dump them. Oh, pump the market, says Mike. I think he said dump. Probably, we'll see. Let me see Kanye's awful rug pull coin. What even was the ticker? It came and went so fast. What was it? Coin market cap. What was it? Yee. Yee. SPX rolling. Wait. Stocks rolling to all-time high while I try to figure out Kanye West's ticker. It was only ever on Radium. Yeasol. Oh god, here we go. Wait, this isn't it. This can't be it. What? Stocks looking for all-time high here today, while Bitcoin finally flipping the monthly green. August back to green, baby. Let's go. It was 𝐒𝐈𝐆𝐍. Dude, this shit's so stupid. 𝐒𝐈𝐆𝐍.
I know you've been expecting me. Turn on the cameras, take another scene. We go like hands on people. Yeah, with the show, we're taking over.
Easy money.
And that's my DJ. Picture my soul, aim for the stars. My people, we never fall. I'm a million.
Wait, what? This can't be it.
when I'm touching the earth.
This isn't right. Why can't I find this? Like, this looks closer to right. Why isn't this working? I want to see it. There we go. Here it is on radium. Oh my. Oh my. Stock's still climbing, boys. It's getting serious. It's getting serious. I'll go back to YZY. We'll look at that rug. But it's getting serious. Stocks are now $10 away from all-time high. Basically a 0% move to the two stocks at all-time high, to indices at all-time high. Bitcoin flipping the monthly green at the same time, breaking the monthly pivot. Ethereum rocketing to all-time highs. Look at these candles. Ethereum really showing strength, as it has been. Let's be real. Sit down. Ethereum showing tons of strength. We looked at this on Wednesday, showing the Ethereum Bitcoin pair holding lows, and Ethereum really flexing its relative strength against Bitcoin. Now today, breaking in the pair. Let's go on the journey to 0.05. Seems in reach now. Sit down. All-time highs on Ethereum are like at our fingertips. At the fingertips. Easy. Oh god. This is what. Who would have actually bought this though? That's the thing, right? Who would have actually bought this? Like, you would have to be such a tard. Such a tard. Speaking of which. Speaking of which, you know who bought some, not me. Hold up. Did he delete them? I'm sure he deleted them. You know who did. You know who bought it. You know who was shilling it. Bro, this guy, dude, he is being paid to do this. There's no way. 18 on Yeezy. Added a bag of Yeezy. This could actually kick off the bull market with a tail. Only James Wynn. Only James Wynn could ever say these. Like, what? Can't stand Yeezy's taking liquidity. Bruh. What an absolute clown. And you knew it. You just like knew he was buying it. Dude, I almost guarantee that he didn't actually buy. I guarantee he had like allocation in it, or they paid him. I guarantee it. I can't guarantee it. I have a strong feeling that that's what happened. Paid to promote it. Didn't disclose it. Dumped the coins. You'd have to be so dumb to buy this. Like, I'm sorry. If you guys bought it in here, I don't know. I think you understand. I think you understand what's wrong here. You made your mistakes. I bet though, if people bought this here, they bought it just, trying to play a scalp. They probably weren't buying it to hold it. I'll give you that. James lose. Yeah. James win. No, James lose. LYOSS lose. Let's go, Ethereum. Dude, this looks bonkers. Ethereum's like about to break out right now. Like, what else is this? Huge fake out as soon as Trump speaks, maybe. This is fire, though. Look at that. Look at that. Should we do that with the arrow? Just to encourage it. Go Ethereum, go. Make me rich. Make me rich. beyond Yeezy's wildest dreams. Make me Yeezy rich. I saw an article that was like, traders lose $2 billion as 𝐂𝐶oin. No, they didn't. These article writers, man, they don't know shit about shit. There's never $2 billion in 𝐂𝐶oin. Ever. Market cap does not mean money. In fact, market cap like guarantees that you don't have that amount of money. Like if market cap is $1 million, you guarantee there's not $1 million to be extracted. That's how market cap works. Bitcoin looking really good here as well, retaking the monthly pivot, higher lows, retesting resistance, eating away, really looking to break out. If it breaks down from here, it'll be quite a fake out, which wouldn't be surprising. This has been brutal trading. Ethereum, same thing, looking even stronger, right below all-time high, just $200 away, looking to make that move. Could be today. Stocks in the same boat, reaching up to all-time high. They're closer than either of them, but showing a little reluctance here into this hour, into upcoming lunchtime. Stocks so close. I like this kind of like jazzy music. We're actually pumping, maybe. Are we gonna get a real pump? We're actually gonna pump Bitcoin? Yes. How do you come up with targets if it breaks all-time high in Ethereum? That's the trick, right? This is my favorite chart of the day. The dollar. By the way, Felipe Gadrol, thank you for the super chats earlier. Sure, Powell was speaking, so I don't want to say anything out in the chat, or I don't want to say anything live, but I saw you. Appreciate you. You the man. Dollar not enjoying that symposium. Crypto, stocks, gobbling it up. How do we come up with targets? It is not an easy task. Fib tool's the best way. My targets for Ethereum, my take profit targets, we went over in a stream this week. Wednesday of this week. All-time high was the first target. And then I'm going to be looking up here. Just below 10K. All-time high, just below 10K. I think that would be a very solid way to approach profit taking. Basically taking profit at both those targets while still keeping a moon bag, still keeping some of the position open, because you never know when crypto runs, it runs. Having something to fight, having something, so that if it continues after those prices, if they hit, that you don't feel that FOMO, you don't feel the burning urge to buy back in higher and get wrecked. Let's go. Bitcoin right here. So close. Do I think September will be a negative month? If we just rocket into the end of August, yeah, probably. We'll probably see some red in September then. So no TP at 5.6 or 6K, keep it up until 10. I mean, you're playing a leverage position. It's going to be different than spot. That was more like a spot comment. You can do it anyway, right? There's so many ways to do it. That's just the way that I think is simplest. Easiest, brain dead, set it and forget it, walk away. Pedro. NPCs. Anyone have a good average down calculator? I do not. Sure, Powell did not wreck our butts, not today. What is the announcement? Trump later? I don't know, man. I'm not gonna lie, the guy does so many announcements. It's, I really think it's like an announcement just because Powell spoke. I don't have confidence when he says there's a big announcement that it will be a big announcement. Sorry. Yeah, it's not like because I hate Trump. It's like we have them all the time and they're just never big. They really just haven't been big. Like when he announces them, they sound big, and then it's like it doesn't end up being big. I don't know. I don't think it'll be anything that will be huge. It'll be like doing a trade deal with someone, you know. I don't know. I mean, I'd love to be wrong. Let's rock. Let's get the economy pumping. Let's juice it. But like, I'm not gonna get excited. He does speak every time Powell speaks, but he speaks a lot more than Powell. So he does like his Friday announcements. We'll give you that. Wants to fire the Fed for alleged tax evasion. Or it's like mortgage fraud or something. Something like that. I mean, it's alleged, right? Don't they have to go to court? And go to court if they committed mortgage fraud, yeah. Do whatever. I don't know if jail time's the thing, but like... people shouldn't be fired for alleged things, though. I don't even know who the Fed person is. I don't even know which one it is. Cook, I don't know who that is. Just one of the Fed members. But investigate him, man. Investigate it. Just like everything. Back below the monthly pivot, the edging continues. Talk is cheap. All I do is talk, no actions. Yeah, no. It does feel that way. We're going to find budget neutral ways to buy and confiscate Bitcoin. Yeah, the confiscating part is the scary part. You're annoyed with your brother. You told him Yeezy was a scam. He called you a woke idiot based Bailey. Ain't that it? Based Bailey, you gotta go. You gotta go to your brother today and be like, yeah, man, what about that woke idiot? If you don't buy rugs, you're a woke idiot. Yo, what a low IQ take. What a crazy take. Just a crazy gibberish take. Arrow almost up 20%. ARB. A lot of the A coins for some reason are up. ARB. Arrow. ARB. Into hedge territory, but honestly, I don't like the short now. After Link broke, I don't like the short. Arrow definitely rocketing here. Broke 144. Honestly, I would just not. I would not look to. I wouldn't look to take it. If anything, I might look to just re-long 144. Something like that. What about Litecoin though, Wick? You son of a bitch. I mean, everything is up marginally. 3%. I think I'm losing control. I think, yeah, this mix is bopping. I wasn't sold in the first 30 seconds, but it's bopping. Get to the gym before the dumps, I agree. Algorand. Nada. Still in the flag. I mean, yeah, it could be bullish, but still in the flag. A little bump on the monthly pivot. A little monthly pivot bump. Let's go. Let's go. What's up, Randy? Can we get a link to this playlist? Yeah. Those red lines. Here we go. DJ 𝐂𝐚𝐫𝐿 officially released this 3 days ago. We played a bunch of his mixes over the years. Some of them are great, some of them aren't. This one's got me. Check him out. Ooh, Bitcoin blasting, breaking them highs. Let's go. Back tested the monthly pivot one more time. Wow, actually that was in the new hour. Closed just above the monthly pivot and now making the move. Let's go. Oh my god, let's go. Let's fucking go, fam. Send it. Stocks are going to all-time highs right now. Stocks looking at all-time highs right here in the face on Friday. Ethereum? Go Ethereum. Go. Bitcoin kind of taking the cake here. Front running it all. Shorts getting raggedy wrecked. What's up, Jeanette? What's up, Ion? Mr. Pax, how are you, my friend? Bad Fox is here. Malgi. Alchemist. BPN. Brody. CKB. Chimera. Cody Codes. David Middleton. DB Trades. Dominyakus. M, Fonzie, Gamer, Ion, Jeanette, John Doe, Joshua, Edson, Leroy, Line in My Pocket, Maniac, Killer, Market M, Matthew Barnes, Mr. Dinkles, Mr. Techno Goody, what's up, bro? One House Productions, Ralph Enjoying the Sun, Randy Greer, Sander, Sierra, Snuff McLeod, Soft One, Space, Sweet Biddy McGee, Tickle Bear Wick, Yoshi Zulki, what's up, boys? Pompid, Matthew Schmid. Bitcoin off the monthly pivot, directly to the monthly pivot on the Jackson Hole meeting, broke through, back tested, and started moving in this hour with a higher high. Beautiful way to march back to all-time highs. If you're tuning in, you've missed the spice. Stocks directly under all-time high. I wouldn't even be surprised if other indices broke. S&P staring in the face new all-time highs. It's just incredibly possible to see today. Ethereum blasting off as well. Really ripping. I'm looking for all-time high tests. Let's go. Let's go. Just send it. It's time. Yeezy coin still basically at zero. Yeezy coin still a rug. Endorsed by James Wynn. Publicly on Twitter. I will give him these props, and I will give him actually this respect. He didn't delete it. He didn't try to cover it up. I'll give him that. That's good. S&P right now, maybe breaking two new highs. Two new all-time highs, baby. Tokyo, if you see me, then you need me, then you know you got to go. Where's the play? What's up, Juanito? What's up, my friend? It's time. It's time. It's time. Should we expect a heavy pullback? I mean, if we've learned anything over the years, over these last few years, probably. Pengu moving coin collector. My Pengu got riggedy wrecked, so I don't like Pengu anymore. Thanks for the $2. Pengu. Pengu back to resistance. Breaking here would be good. Be a good way to continue the move. Ethereum and Bitcoin got all the attention right now, though, guys. Ethereum just hit a higher high in this minute. This coupled with the hilarious, almost like, I don't even know what bank was that. Whatever bank. Remember that bank that just like went to zero basically over like in a day, had that big red candle? That's what the dollar looks like right now. The dollar still hasn't broken August's low, but it certainly looks like it's going to. Look at this. From the moment the Jackson Hole Symposium started, boom, straight down. Likely a propelling force in stocks and in Bitcoin right now, and in Ethereum. Rocketing. I wonder if you don't. I kind of want Ethereum up here too. I can't really do 3 charts. Can I? Never say never. We can do whatever we want. Sky's the limit, baby. Let's go. What's the all-time high? 4867. All-time high right there on Ethereum. Bitcoin higher highs right now. Stock's actually lagging. Stock's a little bit behind. But they are the closest to their all-time high, so maybe they're a little bit ahead. I don't know. There we go. Let's put these on like 5 minutes instead of 1 minute. Though the 1 minute is spicy. There it is. Send it. Oh, this one could be real, boys. It could be real. Finally real. Sui's on fire. What did they say? You're late? What didn't they say, baby? They said, pump the bags. That's what they said. Set us up for a weekend bloodbath. Like I said, every rally that we have seen this year, and even last year and the year before, has pretty much instantly gotten sold off as soon as it got exciting. Starting to get exciting. Probably can expect that sell-off, right? Probably. Bitcoin dominance continues to drop, ushering in everyone's favorite term, alt season. Quite a drop here. Big old drop. Big old drop. Heading towards alt season. Well, technically is alt season as it drops. Deeper. Stock's so close to all-time high. Just do it. I feel like it's just gonna stay here all day because that's just what the market's done. Keep hitting those likes, boys and girls. It's spicy. Hella spicy. All-time highs, insights for stocks in Ethereum, Bitcoin, rocketing. Retaking the monthly level directly from the meeting start. One of the very few satisfying moves that we have seen in this space in a long time. Someone check on Ben Cohen. Why are we checking on Ben Cohen? Total must be rising. Total is up. Total is up. Not at all-time high. It's because Bitcoin's still down. Still down from its high. But total is blasting from support. It did get sketchy there. This arrow has been here for quite some time. Did get sketchy over this week and Wednesday, even Thursday night. Back testing that previous all-time high again. Hopefully for the final time before the move to 5 trillion. Total looking very good. Dollar looking very bad. It's 11 o'clock. We've been live since 9:30. 9:30. Still got good views, good viewers. If you're out there and you haven't subscribed yet, subscribe. Join our fam. We cover 𝐂𝐴 everywhere he goes.
In the mix with DJ.
We're live Monday, Wednesday, and Friday, regularly trading live, charting live, chatting crypto live, you know. The goods. Join our Discord, discord.gg/TomCrown. It's free. If you sign up with any of the partners, such as BYDFI, our exchange partner in the video description below, you will get into our VIP rooms there for free. It's the only way in. Come on, keep moving. Let me see, anything else to show? That's good for now. Also, make sure you're having a happy Friday. A good weekend could be upon us. It's not good. I still want more caffeine. I had all my caffeine today. I still want more caffeine. Probably because I got up early. I woke up early and did homework just for you guys. Let's see, my prescription's supposed to be ready today. Bum, bum. Sounds delicious. Yeah, not yet. Let's go. 116,700 Bitcoin pushing higher after backtesting the monthly pivot. August is now back to green off of the Jackson Hole Symposium. Stocks are looking at all-time high. Ethereum's looking at all-time high. The great pump. That'd be awesome. DJ 𝐒𝐈𝐆𝐍, official, spinning the tracks for us digitally. Check him out. What's up, Anna Marnava? Total breaking out. Speaking of total, we just looked at it. Total breaking what? New back to the weekly green. Weekly now green. Oh, what a candle. Look at that buying pressure. Total rejected from the all-time high, back tested the previous all-time high, now back to its weekly open. Buyers, that's what that shows. Buyers eating that up. That's so bully. Let's go. Total, it's time to embrace your destiny. Head to $5 trillion and let's start melting some faces. Bitcoin dominance down, alt season upon us. Come on. Come on. Let's go. Derek Merrill. Derek Merrill. Our guy. Next time, the next symposium will get you there. Tom with the beard, dude, my beard is just so beardy. I got past the point where it gets really itchy. And so I'm just letting it go. It's actually much longer than it looks too. I have it all like pulled down. It's nice and thorough. Is there a bonus? You better believe there's a bonus on BYDFI. You better believe it. Deposit bonus. Hey, Professor Beans. Got any CP Bean? Professor Beans in here. Let's hope this link works. It does work. Wow, my computer's going slow. Why is it going so slow? There's actually an active campaign going on right now for deposits. I'm petting Professor Beans with my left hand. Deposits on BYDFI using my link. Check it out. Beans, you got? It's just got a little bumpy, a little skin taggy. It's got. Or bean. Or lady. I can't find it. What's up, Mr. J? Josh Petit. Petit. You wanna.
I could do. I saw him look at me, but then I looked to you. Just grab my hand, he'll understand, and let's dance like 1992. Girls, don't need nobody, girls.
Like that's enough. Like that's enough, Papa.
Don't need nobody, girls. 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 Don't need nobody, girls.
Professor Beans. She's like 13 now. She's a little old lady. Love her. Light of my life, Professor Beans. Bitcoin looking good. Stocks looking good. Ethereum looking good. Total crypto market cap looking good. Look at these candles. Just when times were the darkest. Things looking awesome. Dominance ushering in the alt season. Yeezy coin. I mean, exactly as expected, one would assume. Did it stop trading on Radium? Did like Radium delist it? Because look, Thursday. What's weird is why is this trading at like 70 cents on DEX or centralized exchanges? 80 cents. It's weird. There's something weird about this. Maybe this Yeezy chain, maybe this is like a different one. I don't know. It's so confusing because there was already like scams about it. There was already scams. What a scam. What a rug. By the way, I did predict this would happen. I should find that tweet. Literally predicted that Yeezy would launch his own coin and rug it. Bitcoin moving higher, let's go. It's going so slow, I just want it to blast off. I just want it to go. Let's see. Here it is. I found it.
Yo, before we get started,
I caught, and it wasn't 2025, so we still win. There we go. Found it.
And then just touch me till I can get my
Satisfaction. I used to love that song. February 7th this year, Kanye West will launch a rug pull in 2025. Damn, he cut it close though. Damn, he cut it close. That's right. Golf clap. Let's add that to add to highlights. I mean, did we call it? Yeah, of course we called it. Ooh, Bitcoin's still moving 117 and counting. Ethereum's slowing down here, kind of mirroring stocks more. Bitcoin now stretching its wings so low. New glasses? Yeah, just felt like wearing something else. It can get boring wearing the same stuff all the time. Just testing out new stuff. Kanye will launch a rug pull in 2020. Damn, that slaps. Was it actually Kanye? I mean, I believe so. I mean, was it actually did Kanye do the contract address? No, dude. I mean, he had help. But Kanye, like, I'm sure he profited. That's all that really matters is did he profit from it? I'm sure he did. Love the new shades. We're just testing stuff out. Dude, let's go. Just touch me. 19.5, man. 19.5. 19.5 is the weekly resistance. This is like the last level that we're looking at. 19.5 right here. It's the 618 retracement from high to low at this point. It's the top of our trading range that we discussed last week. Basically the last stop for a hedge, if you ask me. You're looking to hedge 19.5. I think that's where we're moving back up to slowly. Slowly but surely. Affiliate link for sunglasses? I know, I wish. How many people just buying Bitcoin next cycle? I hope all of them. Hopefully everybody. Gotta turn the music down. Man. There you go, that's all you get. It's a dance party. The CME gap definitely coming. Oh yeah, coming back down. Gonna release us from the tension a little bit here, from the suspense. Releasing the tension. Come on, Corn. I don't know if I can go anywhere. Like, how long am I gonna stay here all day? Maybe. God, like, what am I supposed to do? It's inching up. We've been live since 9:30. He's gonna stay here all day as it inches up. Maybe. No. No, it's Friday. Got Friday stuff to do. Nostradamus. Ooh. Never heard that before. Nostradamus. Yeah, Link looking nutty. Link heading for $30. Alt-Season. Russell broke out. Breaking out. Breaking out, not broke out. Breaking out. I mean, yeah, broke out. Oh yeah, that's looking good. Yeah, send that. Go ahead, send that. Sent it. Get sent. Get sent. RTY. So why are you? What's RUT then? Same thing. Same diff. Same chart. Dude, everything's pumping. Except for the dollar. The dollar is getting wrecked. Getting rigged. Jackson Hole. Man, it's a shame. It's our last Jackson Hole meeting with Chirpal. Ever. I think ADA will hit $10. Is that too much? That's possible. It's possible. ADA's at like $1 something right now. You're probably expecting too much. Like, I'm not saying it can't happen, but to expect a 10x on is like a lot. It's a big expectation. God, just go. Dollar rug. That is looking ruggy. I just tweeted that dollar ruggy. That's good. Crypto rolling. Ethereum looking for all-time high any moment now. Let's go. Any moment now. Rip hole. Rips and soul. Alright. Things are settled down a little bit here. We're gonna head into lunch. Friday has been a hella day. This has been a hella stream. Appreciate each and every one of you guys. If you'd like to support the stream, sign up at BYDFI, no KYC. Links right there in the video description. Make sure you've liked and subscribed. Join the Discord. We're going to be live again Monday at the latest, but judging by what's happening today, we're probably going to be live again today. So make sure your notifications are enabled. The dance party will continue. If you see us go live randomly today, tune in right away because that means the spice is here. I love you.